All right. Good morning, everybody, and happy Monday. I think it looks like we're gonna have a pretty busy week this week from a news perspective. So I think we should get started here in just a moment. If you guys can all hear me, okay? I hope everyone had a great weekend and you are ready for another trading week. So let's get started. Again, if you're here for the first time, welcome. It's great to have you here. This is our Set the Market morning call here from the Steady Trader. What we're going to do for the next 10 to 15 minutes is go through our notepad here and go through some of the things on my notepad here this morning. If you're brand new, please make sure you subscribe to the channel and so that you get updated in real time when we go live. And also, of course, please give us a thumbs up, like on all the videos, and maybe leave a comment. That really helps us for the algorithms to pick up the show. So anyway, a busy week this week, and I think what we need to keep in mind for this week is that we're coming out of a weekend just now where obviously risk assets are higher. You look at, let's say, the S&P 500 futures, they're up about 1%. But so is a lot of other stuff. And in fact, if you look at the chart here, you can see sort of the intraday action today. Basically, the dollar is, it's a bit mixed, to be honest with you. The dollar's a bit mixed. That's probably the best way of putting it. But you'll notice that gold is up sharply, silver is up sharply, and Bitcoin's up over the weekend as well, right? So now the question, of course, is why is that, right? Why are these assets higher over the weekend? And the answer is rather simple. It's because we've had, again, there's hopes and dreams of basically more stimulus, which is would be easier money, the government reopening, but also more stimulus in the form of these potentially $2,000 dividends, as President Trump mentioned over the weekend. We don't know what that looks like. Besant was already sort of walking those back or kind of damaging control and saying they're not going to be checks. I don't know what they will be then, but it doesn't really matter. The point is the algorithms immediately pick up on that and look at that as more stimulus, which is why you can see stocks up, you can see gold up, and you can see Bitcoin up. Now, one of these three doesn't really rhyme. Why is gold up? Well, gold is up because people are not really happy about this whole, the stimulus, because it means more debt, right? So that's why you continue to see gold in a bullish trend. So for those of you folks that are using our market or trend following algorithm, which I would encourage everyone to use, you can see we've remained in a long-term bullish trend in gold that started basically in January of 2024. Now, I tactically removed most of my gold. In fact, actually all of my gold. The last bit of it, I don't know, about a month ago, something like that. I'm getting tactically more bullish on gold now today, okay, tactically. So just keep that in mind in terms of what the trend is, I should say. So the trend never ended, never went to like bearish or neutral. The trend in gold has remained bullish. So I'm looking to add a bit here from a tactical perspective in gold. And again, that's largely due to, if you analyze the weekend news, right, there's really two things. We had, again, there seems to be some movement in terms of a potential resolution on the government shutdown, number one. But again, the stimulative part of the weekend news, which was Trump's tweet on the $2,000 dividends for most U.S. citizens, that is stimulative, right? That's why gold is up today, and gold is up quite strongly again, about 2+% here this morning. So let me know if there's any questions on that. I'd be more than happy to address this a bit more. In fact, if you look at the price of gold, I'm going to quickly show it to you here. This is just an absolute chart of gold without any of the wonderful help of the indicators that we use. But this is just the price of gold, and you can see we're now kind of perking up a bit today. Okay, so that's what we have going on here today. Same thing with Bitcoin, and this gets a bit more dicey because there's Bitcoin remains consolidating. So I think people need to understand that Bitcoin is still lagging most of these assets, including gold and so I think it's just this is the one thing that to me really doesn't add up. I think and I understand there's some technical matters. There's been a lot of original Bitcoiners that have been selling into the market, and we've heard this now many times. So I get that, but that's not the case with Ethereum, right? And that's been down, right? So there's probably a liquidity thing going on here. Liquidity having been withdrawn, although we know that the Treasury injected more liquidity over the past 2 weeks now. And now, of course, all of this is more stimulative, that the news over the weekend. So to me, something is a bit strange here. I don't know why Bitcoin wouldn't be rallying more based on this, but so that's what to me is a bit more concerning. And if you look at, for example, SOFR futures, which is basically overnight rates, this made a lot of news on institutional trading desks over the past few weeks. Actually, specifically the past 2 weeks, and you can see SOFR has gone from 4.25 to about 3.9 ish, and it just begs the question: is this short-term lending rate going to go down a lot more? Because if it does, for example, like it did in 2020, it typically would be foreshadowing a problem in the economy. So, for those of us that manage money from a multi-duration and global macro perspective, this is really, really important to watch. We can also watch 2-year rates, 2-year yields. So this is the way to look at that. And I'm just not quite sure we're at a point right now where 2-year yields are just there yet to be able to move a lot lower. I need to see. In my view, 2-year yields are still basically consolidating since April. Really, they haven't been able to break lower. They've bounced every time they get to these levels here in the 3.5% area. So I'm not quite sure, honestly, if there's a high conviction trade that I can put on here just now. So that's what I'm watching here right now. So that's that. We'll talk about equities here last in just a minute. I do want to quickly just mention that we've seen a bit more pulling in of things like uranium, which had a pretty big move to the downside. Uranium remains in a long-term bullish trend, so we're not really seeing that trend change, but we are seeing a mean reversion move in basically risk assets, which we'll have to see if that was ended late Friday, but I don't know. We'll have to see. All righty, let's see here. Just checking a couple things here before we continue, and then I want to look at stocks here in a minute, particularly for the S&P 500. And kind of see if we can make some sense of all this, because I think this is something that obviously almost everyone is watching very closely, including us. Okay, so just quickly on the S&P 500. So basically, from a trending perspective, the S&P 500 remains bullish trend. From a momentum perspective, this is what we track using our trender indicator. You'll notice that the SPY ETF has not yet changed its momentum even, right? And we talked about this last week, I believe here, as well as to our members, of course, that the momentum buy signal that we received in April, it remains intact. It has not changed, right? We do not yet have a sell signal in momentum. So that's why we want to be careful here on the short side, but we also want to respect the fact that things have been slowing down, right, on the upside. So I think the positioning gives me the biggest sort of, concern. Excuse me, not the positioning, the conviction on this year-end rally. Like everyone seems to be thinking it's just going to continue to happen. And again, I wouldn't necessarily bet against it, but my conviction is about 60% that we see a further melt up here into year-end, because I think there's a lot of stuff here that from a Max 7 perspective could go wrong, because I think those bond issuances that we saw over the past couple of weeks are changing the structure of those companies, and so I want to be a bit careful on that. So if you have any questions, let us know. But again, just to reiterate from a momentum perspective, the S&P and the NASDAQ never even changed to bearish momentum last week, right? So we're nowhere near this being like a conviction short. It's just still bullish momentum, right? And certainly bullish trend, okay? So I just want to quickly point that out. And then Nicholas wants to look at EME. So for those of you guys that don't know EME, it's essentially, this is one of those companies that's like in the industrial space. I don't know, a whole bunch of people have been talking about. I'm not quite sure what the question is, Nicholas. I'll have to get a bit more information from you. But basically, there's two ways I can show you this. So from a momentum perspective, EME actually does have bearish momentum, right? So you can see, unlike the S&P, we actually have a sell signal, a short signal from momentum. We had a buy signal back in April, and we last week received a momentum sell signal. From a trending perspective, so this is where the longer term trend comes in. If you look at EME, you can see it is in a bullish trend still. So, near term, there's bearish momentum. We'll see how long that lasts. But the trend, the bullish trend, from a trend following perspective, Nicholas, started in August. In fact, this is an important point. So this week in our educational series, we are talking about trend, and we are doing a educational session about how to spot when major trends change, right? Because that's typically where most people either make a lot of money or lose a lot of money, is by not recognizing or failing to recognize, right, when a major trend starts or ends. And so we're going to show you guys how we do that with our market rover, and what the process is of making sure, catching major trend changes, be that an individual stock or an ETF or an industry group or anything like that, right? So that's what we're going to do this week in our educational series. So for those of you guys that want to educate yourself on that, just make sure you click on that link. It's just in the chat box. Christian just put it in there. You can put in your name and email address, and it should get started. And it's free education, as we mentioned. So that's what I wanted to show you here this morning. If there are any questions, I'd be happy to stick around another couple of minutes. Otherwise, we'll come back here tomorrow morning. Again, this morning, just to quickly remind everyone, we are seeing the risk asset markets push higher. And again, a lot of that has to do with the stimulative nature of the weekend news. But gold and silver are not up because of that reason. They're up because people are concerned about how that adds more debt to the whole landscape than we already have. So it's I think quite fragile here. I think again the year-end move we could certainly see more rally into year-end. But I think again my conviction is not 80 or 90% like most people seem to have it. I'm closer to 60%, and I think that's where I feel comfortable kind of being in a hedged position here on my equity book personally into year-end. So anyway, we will see you guys back here tomorrow morning. If you are a TradeUps member, we'll see you over there. There might be some trades to do this morning. I'm looking at a few things, and we'll be talking about that this morning in TradeUps. And again, this week we are talking about the major trend changes, how we can get on top of when major trends start and when they end. I'm talking about major ones like that last for multiple quarters and years. Think of stocks like Palantir or, major sectors and groups, but also when they end, right? So anyway, we'll see you guys in that session. Please, everybody, give us a thumbs up, like on this video, and anyone you watch on ours, maybe leave a comment. Definitely subscribe to the channel. And we'll see you guys back here tomorrow morning. Thanks for being here.